understood, and I would suggest that very few of your viewers understood anything that was just said. They're both absolutely wrong. Let's go down into the minds of the people who are taking the money out of the bank. There's one statistic here that's important. 73% of the capital in Northern Rock comes out of capital markets. They rely on money from capital markets, which is mostly now from the United States. Now, get out a pencil and a piece of paper and write down $100,000. Back when markets were sane, if you took out a mortgage for $100,000 in the United States, you would have to put 20% down. Let's say that you were making $100 a year, to make it simple. You were asked to pay a 6% fixed mortgage on the $80,000 that you're borrowing. Okay, you with me so far? Now what that means is that you, as the guy who's paying for the house, are giving the bank $479 a month based on your, let's say how much, that's a percentage of what you're making every year. And it fell into maybe 1/3, maybe a little less, maybe a little more of your total salary. At the end of this 30 years, that bank, on your $80,000 money that you've borrowed from them, they brought home close to $93,000. Okay, that's the deal. Then it fell apart because these banks and the advisors went out and said, hey, you don't have to put anything down. And guess what? You don't have to put in just 2 or 3% of your salary. If you're making $100 a month, we don't care how much you're making. We'll give you that $100,000. You don't have to pay a damn thing for it, and you might not even have to pay anything for 1 or 2 years. They were giving this money away in the United States for one reason.
Nonsense.
No, it's not nonsense. This is precisely what happened in the United States. Dollars were cheap. Foreign currency came in, and the bankers participated in this.
It gets much worse.
And this is why this is happening. Because you have all this outstanding money, and there's nothing there to pay it. And as far as this liquidity thing goes, you're absolutely right. But you know what the problem with liquidity is? If you don't have any liquidity, then you're not doing any business. No one is now going into Northern Rock and saying, we want to do business with you. This all started, as we all know, from the subprime mess.
Okay, a couple of points. You just described in terms of no income, no asset mortgages, that in the last 2 to 3 years, something like 30 up to 50% of loans originated were just those types of mortgages.
Precisely.
So it's a huge piece of the business.
Huge.
And the fact that it's imploding is part of this Ponzi scheme that's imploding. And what you failed to mention, let me fill in the blank here, is that the bank who makes that mortgage, that loan, at these ridiculous terms that are fraudulent, if not criminal, they then sell those bonds onto another bank for a fee, who sells that onto another bank for a fee. They're collateralized by the fees.
Why are they making, here's the question.
So there's $400 trillion worth of bad paper in the system.
Absolutely.
The entire globe's
GDP. Let's go back to your original premise. Why are they making these bad loans? Why?
Well, I'll tell you why.
Because money is cheap?
Well, the Federal Reserve is irresponsible.
Is it because money is cheap?
Yes.
Okay. Money is cheap. Everyone thinks they're going to get in on a deal, and they forget the basic tenet of banking or investing. Pigs get fat, hogs get slaughtered. You're seeing people get slaughtered, and a lot of folks not willing to take responsibility for this mess, full stop. And that's why you have people outside in front of Northern Rock.
Why is money cheap, though? Why is money cheap?
I want to give everybody equal time. Catherine, why does this all sound ridiculous to you?
Well, money's cheap, that's true, because of the monetary policies there's been going on, the imbalances in the world, there's excess liquidity. Now, you have financial markets where banks want to achieve very high rate of return on equity. So they are incited to take risk and then to pass the risk to the rest of the company.
You call this risk? You call this is your definition of risk. Lending $100,000 to people who have no assets, nothing that they can base this on. They have no income that they can say on. They have absolutely
you're
nothing.
Saying it's irresponsible.
That's your definition of risk.
Obviously, this is irresponsible. This is also what's called microfinance, when you lend to people
But
who
is it
have
risk?
nothing.
No, is this your definition of risk?
Risk is just a probability. Those people, you can consider that those people have a positive probability to repay their loan.
People who
Yeah.
people who have no income have a probability of paying.
Okay, you are talking.
Why are rates low?
about-
Why are
No,
interest rates low?
No,
I'm gonna-
not. Look at the mad cow disease. Same problem. Okay, you had some cattle that were infected, and suddenly the world stopped eating steaks, right? Meat. Okay, same problem here, where it's not because some cattle, some specific banks, and not the major international banks, have given out those bad loans, that the whole system should pay for it, and everybody should stop having a bank account.
I disagree.
I mean, you
know
can't
what? I'm
exaggerate.
going to stop here. We've got
you do.
30
It's
seconds
not an
left. I want to give Jan
exaggeration.
Randolph final words. Jan, go ahead. I imagine you've had some comments to make.
Yeah, I've been listening in onto the, on this. I think we have to start with where does the story start? Rising interest rates in the US, in the UK. If interest rates are rising, then those people least able to debt service will be hit first, and that's what we saw. We saw these borrowers in Florida and California take out these mortgages. Okay, the finer details were very complex. They may have been hoodwinked, and the banks offering these loans weren't actually taking the risks because they were securitizing the risks and selling them on to French banks and German banks, which we saw, started toppling a few weeks back.
Okay,
But
Jan,
the
about
basic
5
problem is that-
seconds.
well, we're in a series of crises here.
I know that gives you
and
time to say nothing, but I'll let you
the
continue
real
with that
problem
then
is the moral
after,
hazard of lending without
right.
taking the risk directly
I'll let
yourself.
you continue with that after the break, because we have to take a 12-minute break now for news and weather, but we are going to continue this discussion after that time, so do stay with us.